Dave. So this is a chart for Cardano, or ADA as it's called. The ticker is up in the left hand corner, which you can't actually see on the screen. This has been forming a descending wedge for it started on the 23rd of December and we're now 11th of January, so what's that, 7, 8, 20, 19 days. So it's a pretty confirmed pattern. It's ranging between this support and this resistance, a little tiny bit of a fake out just here, but generally if you link the wicks down the line, yeah, it's pretty much following that range. There's a couple of things about it. One is when you look down and see how many touches it's got, the kind of rule of thumb is that on the fourth attempt it should break. So fourth stroke fifth attempt it should break. Now we've touched it once, twice, you could even call that a touch really, twice, 3 times, 4 times, 5 times, 6 times, 7 times. So we're at the 7th attempt to break this wedge. Now we've also tested the support 1, 2, 3, 4 times. Again, we faked out. That was yesterday actually. We faked out and then come back into the pattern and come up to meet the resistance. That would have been a good long trade, and I was looking at that yesterday actually. It was to buy some here and let it run up to the resistance and sell it. Now I'm in a position where I hold a fair bit of Cardano, so I have options here, and my options are to, now that we've come up here and tested the resistance, we've tested it twice, so you can see we've touched it just here and then we've touched it here and been rejected again. So you could assume that we're going to drop back down to the lower support again and potentially break it. If you look at the length of the wedge and break it down into kind of quarters, we're in the 4th quarter now, so this is the point where we should see a breakout of the pattern. Now the only thing that's stopping me is that it has tested the resistance more than it has the support, which means it's kind of trending in the upper edge of the channel. If I draw a line kind of along here around about where the average price action is, we're kind of we're moving towards the upper side of the triangle, even though the trend is descending. The descent of the average is less than the descent of the triangle. Now these patterns, the technical target, and they do on percentage, it's about 85% of the time they break up. So the target would be for this particular pattern is again the top of the wedge, so the target would be somewhere around about $1.55. Obviously you need some volume for that to happen. There needs to be support of the move. Now the other thing we were talking about yesterday is the let's delete that, is the 20 and 50 day moving averages. So the purple one actually is the 20 day, because we broke the 50 day moving average quite a long time ago. They really, if for the trend to be bullish, they should be the other way around. The 50 day should be below the 20 day. So at the moment we're in a very bearish pattern. However, as you can see, we've come down and we've retested the 20 day again. We've wicked down slightly below it and then we've pushed back above it, and we're currently sat on top of it. So really I'll be watching this this support. Now this is on the 1 hour time frame. If I back it down to the 30-minute, again, you can kind of see that we've come down and we've wicked just below it, and we're now just going back up to try and break back through it again. Now this kind of target move, which is set, as I've said, really the technical target, if you're doing full, normal technical analysis on it, and it doesn't mean it will happen instantly, but it will probably go something like that. It would go in kind of this direction rather than just a straight breakout that goes straight up, unless there's a major news event that kind of pushes it in that direction. But so we've come down, we've tested the resistance, we've dropped back down, we've hit the 20-day EMA, bounced below it, we're currently bouncing back up above it. If it does break, what you'd expect it to do if you were planning to do a short trade is you would expect the 50-day to kind of do something like that, and if it breaks out, you'd kind of be looking to, if you'd bought in and you were making a short trade over, and bear in mind this is like a 24-hour period, so if you were day trading, you'd kind of be leaving it run and setting your sell order in at the 50-day EMA, because the chances are the first attempt it will come up, it will hit it, and then it will bounce back down again, and then what you want to see it do is you want to see it come back down and test the previous resistance, and you want to see a bounce off of that, and you really want to see it bounce. That's when you would, that's the technically safest place to put your trade in. So you break out of the wedge, you hit the 50-day EMA, you get rejected off of it because there'll be so many people that follow the same format and have their sell orders in at where the 50 EMA will sit. You'll get a rejection off of it just from the pure volume of selling pressure. It will come back down, it will retest the previous resistance, and the phrase that people use is you've turned resistance into support. If you get a bounce, you get a bounce off of it, and if you've got the bounce off of it, that's kind of confirmation that that resistance has now turned into support, and that you can expect the trend to move upwards towards a technical target. Now again, it's probably not just going to go straight up, it's going to go, if I can get rid of some of these drawings, it's probably going to go something like that, and then it will get rejected. By this point, the 20 EMA will probably be up there somewhere and starting to head towards the point where it will cross over the golden cross, as they call it, and then you'll kind of range like this throughout the range, and then when the cross happens, you'll start to see it take off like that. So that is pretty much what you'd expect to see from a descending wedge. It's a really good example. It's only on the 1 hour time frame, but yeah, it's a good example. That's what I'm watching at the moment.